And Mind Crypto here. I hope we're all having a wonderful day. And the title of the video is $1,000 could make you millions in the long term. Please remember to like and subscribe. You'll be doing me a massive favor. Remembering none of this is financial advice. I am not a financial advisor. And the information that's provided in these videos should not be a signal to buy or sell. But first and foremost, we look at the crypto bubbles. We are down one rank to 54 with a market cap of $1.24 billion and a 24-hour volume of $23 million. Currently sitting at a price of $103, which is nice for those who like to trade this. And we are down 0.1% in the hour, up 1.6% in the day, up 3.5% in the week, and up 4% in the month. And it's looking really green. There seems to be a massive injection into the whole of the crypto market, which is always nice to see. And we look at Crypto Quant here, and we look at the exchange reserves. And as we can see, the last value was 1.39 million, as we can see, and this gap is widening, which is nice. But we're seeing this general, as we say, downtrend on what's on the exchange, and hopefully that will continue to decrease. And we can also see the overall net flow on all exchanges currently today slightly up. We're in that plus zone, which is 4,475 quant back into the exchange, but it seems to be going sideways. Hopefully we'll see another dip at some point where we'll see a lot more leave the exchanges over time. And I think also we've got to think about the exchanges and what's happening. We're seeing all sorts, even with some of the top influencers having issues with certain exchanges not showing their funds, but that's a whole nother story. But anyway, we get on to this. We see this wonderful tweet from construction trader ETH, and he says, who's paying attention? Listen to Tom, who's the Chief Innovation Officer at Swift. We would love to work with the BIS, and we would love to work with the RLN. Of course you would, he says. It's Quant Overledger, who is the interoperability provider for both of these. Now, we can see from this is the RLN, the orchestration and programmability layer, which we can see RLN, the integration gateway, and we can see all the retail bank, RTGS, and other banks, and we can see this shared ledger for central bank and commercial banks, the RLN. The discovery phase also produced a comparative analysis of 5 architecture options across key functional parameters. These included the need for partitions, settlement avenue, use case coverage, locking, unlocking, synchronization, and more, which helped give a summary of view of key attributes for application of each architecture. Analysis was carried out on whether decentralized or centralized infrastructures are more architecturally viable. The analysis revealed that decentralized technology has significant advantages that RLN can benefit from, particularly on tokenized theory, integrity, transparency, and privacy. The discovery phase technology work also focused on comparative analysis of technical platforms that could best fit RLN architecturally. After initial research, the analysis was validated by information gathering exercise with key technology platforms. These included Corda R3, we know who's working with them, Adhara, Millicent, Quant, as you can see there highlighted, Polygon, Canton, Settle, and Nox. There was also a detailed analysis on Quorum. Again, we know who they are, Parity and Hyperledger Vesu. So all names that are quite familiar there. Let's have a listen to this video. This is from the Digital Dollar project. Let's have a listen.
And then allow for these platforms and solutions to talk to each other at the basic level. So have a limited number of interconnections and have the opportunity to reap the benefits of platforms and new technologies.
Thank you. I think what we're seeing here as we talk through all of these projects is a bifurcation of interoperability models, right? There's one understanding of interoperability, which is that there's going to be a common platform of some sort. It looks different across different models that we've looked at that everyone is going to operate on and build upon. And then there's an understanding of interoperability that's different from that, which is that people are going to be working across different platforms, and how we build bridges across those platforms is what interoperability is about. Tom, I want to turn to you about your thoughts across those two models of interoperability.
I mean, I think it's too early to tell, right?
Yeah.
And so, you know, we've been working at Swift with Tony and the group of banks, not only because it's a really clever idea, but it's really a compelling view of the future, right, and what could be. We don't know how it's going to play out, but we've kind of set the stage to run the POCs. So even from kind of early white papers, in the US, UK, we've been working with Tony and the banks and others on this area, and that might turn into, the technology that drives the unified ledger.
Yeah.
We'd love to work with the IMF. We'd love to work with BIS. We think these are really compelling, if we end up with, in that scenario with a unified ledger. And that probably is going to be powered by an FMI, unless we decide to change how, settlement works and the definition and legal constructs, which nobody's talking about, so probably won't happen. Today we have over 230 market infrastructures that are connected to SWIFT. So it's kind of what we do, right? So we'd love to be involved in that. As you said, there's also other options. And so at the beginning of this year, it's been a pretty busy year in CBDC innovation and exploration. In the beginning of the year, we published a paper and built a beta for a CBDC sandbox, which is based on the interlinking model. So pretty closely aligned with what BIS called Model 2 and does call Model 2. And in that interlinking was the idea that we'd be technology agnostic in terms of new network. The technology would be driving the new network, whether that was a blockchain or DLT based or more traditional centralized technology. And then we connect that back into existing payment rails. We rolled that out to and talked to a number of our clients in the community, central banks and commercial banks. We got really good feedback and encouragements, and we actually built a beta. And we've ran the beta through the first phase. Two things that came out of that. One is encouragement and some additional use cases that our members would like to look at, including payments tied to trade, DVP, and even some FX use cases, which we think are really interesting, in addition to the interlinking with CBDCs. And we have central banks that are actually planning and will publicly announce results from the testing that they're doing in our sandbox using this interlinking solution. So the HKMA will publish results, I think probably early part of next year, and the Bank of Kazakhstan as well, right? So we talk about kind of global reach and kind of exploring what could be. We don't know which one's going to work, so we want to be involved in all of these things. We want to help the industry and the community figure out the right way to do it, and we want to drive the interoperability that we think is going to be required to make these new networks and these new FMIs successful and avoid kind of future fragmentation.
There you go. The unified ledger, RLN, who works with both of them, Quant. And that's the thing, we've got to look here, the language that's used as well. He says he doesn't know which one's going to work, and they just want to work with the one that everybody's working with, and certainly doesn't want to work in a fragmented system. So as we know, he's already said he would love to work with the BIS, would love to work with RLN. So quite exciting as well. It's not a done deal when it comes to interoperability, like some projects would have you believe. We see this, again, a brilliant tweet from Construction Trader ETH. Everyone is talking about harmonized global interoperability platform. We know Overledger is the only interoperability platform that works seamlessly. And this language, again, you have to read between the lines, connect the dots. Seamlessly seems to be something that's very much attached to Quant. Let's have a listen.
To the Undersecretary of Domestic Finance at the U.S. Department of Treasury. Thank you all for being a part of this today. And because I gave my definition of interoperability, I want to turn to Jennifer first for her definition of interoperability and why DTCC is interested in this issue.
Yeah, thank you. So when we think about interoperability, what we're talking about from our point of view is the sharing and the coordination of disparate data across multiple participants, right? So I think that that's pretty easy to conceptualize. Where this gets important quite quickly is how we're seeing interoperability and the connective tissue between these distinct, disparate systems, how we're seeing that interoperability develop. And right now today, when we look to the projects that have already been moved into significant degrees of research and experimentation or are currently on a path to production, what we're seeing across the globe are smaller DLT deployments at subscale that have isolated liquidity pools and therefore are finding themselves creating a fragmented marketplace because of some of the technology choices of proprietary DLTs that have been taken in earlier days and are being taken today. This disparate marketplace is going to challenge our ability for a harmonized global solution, but the answer to that is going to be interoperability.
Now, this all gets me thinking that we are so very early when it comes to these digital assets. It gets me kind of excited, and I see this from Clocky. When you have the chance to buy ETH again at $12, would you? I would, and I'm doing it right now. Quant is like buying Ethereum at those levels, willing to take the chance to do so. One is a blockchain, one is an operating system for blockchains. OWO coming soon rather than later. And that's got me thinking, when I think we are investing in something so early. And I saw this article from the Motley Fool, and it's about Microsoft and about the longevity and about investing long term. So if we see here, Microsoft has been unstoppable over the long run. Inflation and rising interest are hurting consumers' spending power right now. So part of Microsoft's business might continue to deliver sluggish growth in the short term. But there have been some early signs that those headwinds are easing. So 2023 might be a more favorable time for brands like Xbox and Surface. But Microsoft is and has always been a long-term story. And this is the way I see Quant. In my opinion, we are so very early. And for the adoption of this technology in fintech. So when Microsoft listed publicly 36 years ago, it was generating $197 million in annual revenue. By fiscal 2022, end of June 30th, that figure has grown by 1,000 times to $198 billion. Sure, there have been some bumps along the way with companies' growth taking a breather in certain years like 2009. And as we can see here with regards to the chart, we see this dip here and a further dip from 2016 to 2018. But we see this massive rise from 1986 all the way up. So a value of a $1,000 investment in Microsoft's IPO today. Microsoft completed its initial public offering on March 13, 1986 at a price of $21 per share. Since then, the company has grown so valuable, its stock price has soared so high that the management opted to conduct 9 stock splits over time to ensure its shares remained accessible to small investors. Had you invested $1,000 in Microsoft at its IPO, you would have acquired 47 shares at $21 per share. Adjusting for stock splits, you'd actually have 13,536 shares today, with a cost basis of $0.07 per share. Given Microsoft now trades at $238 per share, that translates to a return of 327,000%. In dollar terms, that's a $1,000 investment in 1986 would be worth a whopping $3.2 million today. But it gets better because Microsoft has paid dividend since 2003. And assuming you never sold a single share along the way, you'd have received 341,000 in dividends. Given Microsoft continues to pay quarterly dividend of $0.68 per share, you would still be collecting a cool $36,000 each year, or 36 times your initial $1,000 outlay. Now, that's the power of long-term investing. Now, people always slate me and say, oh, Quant is doing nothing, it's not doing anything. But you've got to remember, I'm not here for the short term. And they'll always say to me, oh, you're only investing in Quant. No, I'm investing in lots of different things. There are coins that I'm invested in that I will be sure to offload during a bull market. But I will keep quite a lot of my Quant. They're safe for future. I'm not going to sell it all off, but I'm going to hold a fair amount for those days when things could absolutely go mad. So there you go, guys. Microsoft, $1,000 could turn into a whopping $3.2 million. So what's in store for Quant in the future? And as we've just seen, we are early. They're talking about interoperability and who's going to be at the forefront of that. Well, I'm hoping that's Quant, because who are we working with? The Bank of International Settlements, the Bank of England, the names continue to go on, massive. And as you've just heard there, it seems like Swift are a little bit unsure who they're working with. There you go, guys, just a quick update. Remember, none of this is financial advice. I'm not a financial advisor. Please subscribe, please hit that notification bell, and just tickle that little like for me. All the best, and I'll catch you later.